Welcome to the 7 Cents Podcast, where we go beyond dollars and cents to unlock the mindset beyond the money.
What's up, everybody? It's your boy Mike Macklin, aka Money Mike, the financial Thanos, because I'm snapping my fingers and I'm turning your financial problems to dust.
And I'm Coach RL, your money mindset coach. Mind right, money right, legacy locked in.
Guys, this is not your average financial podcast. We're breaking down money myths, mindset traps, and economic game plans.
We keep it real, raw, and relevant, from micro money moves to macro financial shifts.
This is a 7 Cents podcast where your mind meets your money.
Hey, welcome back to the 7 Cents. Hey, Mike, I think continue to do it over and over again, just sharing this platform with some really heavy hitters. And I have on Savol Curry. She is super, super amazing. So first of all, she's still active in the military and also an entrepreneur, but we brought her on to share some of her specialties. So she is the founder of Life and Legacy Company, and she does a bunch of amazing things. But one of the things that I want her to do is bust us over the head with some of this tax information today. And I'm truly blessed to have her on. Savol, welcome to the show.
Thank you.
We're going to talk a little bit about what leaving money on the table looks like. And a lot of times people are trying to do the taxes on their own, or they're getting these beginner tax professionals and they're leaving a lot of money on the table because they don't have that thick education or background and understanding what taxes is and how to protect themselves as well. So we want to get into that a little bit. Like, what does leaving money on the table look like, and what have you seen from your perspective?
Okay. So basically, hello, everyone. So leaving money on the table pretty much means that you did not maximize your refund to its fullest potential. And it's very easy to do. One of the biggest reasons that I see where people leave money on the table is, one, because they try to prepare taxes themselves as opposed to getting a professional who knows different ins and outs to increase the refund or decrease the debt. That's the biggest one when you say leave money on the table. Other reasons that people tend to leave money on the table is simply because they just don't know that sometimes actually paying taxes in helps you increase the refund on the other end. They try to get all their money up front, but then you end up with a debt. So then you have to work to lower that debt, which then, of course, obviously you didn't maximize the refund to its fullest potential. Those are two of the main reasons that I see. Let me know how far you want me to go.
Yeah, we'll get a little thicker into it. I want to ask Mike the same question, though. Mike, what do you see in your perspective of people leaving money on the table?
For me, I'm going to take a different approach to it, because when I look at taxes, the popular thing is for people to be looking for a refund. And my first thing is, okay, I use the analogy of, okay, what a refund actually is and where it doesn't really necessarily make sense to get a refund. And I will say this, let's say Rob is my homie. We've been dogs for a little bit, and I want to support Rob's business and get one of the GOAT hoodies he got on. I'm like, man, that's a dope hoodie. I want to get it. And he said, hey, Mike, the hoodie's $20. And so what I do is I'm like, all right, well, I got 30 in my pocket right now. I give him 30. This is what the average American does with the taxes. They pay their taxes. And then I use an analogy. If you was to overpay for a shirt, would you want your money back now, or would you want it back a year from now? And I would hope the person will say, hey, I want my money now. But unfortunately, when a person gets a refund, essentially that's what they're doing. They're letting the government hold that money for a whole year. And of course, the government going to make their money off of it. They're going to go and invest it. They're going to do what they do, and they're going to make money. And then you get back that little piece a year later, which to me, I'm like, okay, that money that you had that now you're getting refunded could have been used to invest. It could have been used to pay off debt. It could have been used for something else. So my thoughts on leaving money on the table, a lot of time in seeking a refund, you are leaving money on the table because basically you could have been doing something for you with that money instead of vice versa, the government doing something for them. And then you get back the little crumbs after they've made 2 or 3 loaves of bread, and they're going to give you the crumbs back. So that's my thoughts on that.
Yeah, that's really good. And that's where I was going to go, just because working with different people, they have different aspects of their lives. But essentially, these taxes are a balancing act. At the end of the day, because people don't have different levels of education, even in having that now money, they don't really know what to do with it. That's why I say it's a balancing act. And essentially, for some people, it does make the most sense if you know how to invest and how to push your money forward to get the lowest amount of a refund as possible, meaning that you probably need to change some things in your withholding. But the biggest thing is understanding what to do with the money when you have it. For some people, it is more advantageous to get a lump sum because they don't know how to save.
Yeah.
But even with people that do know how to save, they don't know how to spend. So it's a very delicate balancing act when we talk about taxes and refunds. I want to segue a little bit into like credits and deductions. It's like some credits and deductions folks generally miss every year, and or they think they know what they're doing, but they don't.
You're asking me this question?
Yeah, that's you,
Okay, so
Savol.
I really want to respond to Mike's comment, but
Yeah, do that. And I'll ask the question again.
okay, I'll answer it after this. Mike, I totally understand what you're saying. I think that when we're looking at the different classes of different levels of those in the workforce, right? Essentially, of
Absolutely.
course, breaking even usually happens for those higher earners. So that means that's that money that you're talking about that they get to actually do something with in the present versus pending the refund that may come right later a year at the end of the year or whatever. But I think that we have to be mindful when people are one, we need to be mindful where people are in the level of the workforce. And then also, I'm trying to make sure I don't say something that would offend anybody, but also understanding that I have to, where you talk about that whole planning, tax strategy and planning, I
Yeah.
got to know how much I'm supposed to be paying in, you know what I'm saying, versus what my write offs could be to even break
Yeah.
even. So, like the average person in the workforce is not going to know that. And so
Right.
I explain it to them like this. For me, I tell them, I said, the taxes that are taken out of your check every month are put into a little savings pot that the government holds for you. And at the beginning of the tax season, so at the end of the year, your preparation of taxes is used to basically lower your tax liability so that you can get the difference of that savings pot, right? Then that's how they refund that money back to you, just to break it down to layman's terms. So for the average worker, is I caution with the whole exemptions and changing your deduction because people will change that to freaking
Yeah.
10. And then
Yeah.
when you're ready to file taxes, they don't have 10 people to put on that tax return. So they're already
Yeah,
at a
oh,
disadvantage, right? So like
Yeah.
I literally at mid-year, I just sent out all my clients. I say, hey, you guys, we made it to July. Don't forget, get ready to switch those exemptions back so that we can get the proper amount of taxes taken out. Sometimes you don't always want to be in the present right now. Sometimes it's okay to just be patient. See, the patience comes in letting them take those deductions, not excessively, but or not drastically, but take some of those deductions. That way you have the rest of the year to strategize on how you can increase the deductions, lower the tax liability, so then you can get all that money back. It's the long game, right? It ain't always a short game. It just really depends on where you are at the level of in the workforce. But I agree with you. That's definitely at one end, usually the higher earners end, right? Typically the lower earners end, or even those who are at a decent place. If you could break even, or my goal is always to get people back a refund. Sorry, I want people to have as much money as possible. I don't care how much you make.
No, I get
But
you.
no, I totally understand what you're saying. So then, Simmons, you asked, what are some credits that people leave on the table? To be honest, it's a lot of them. But my biggest is a lot of them because it goes to tax preparation, right? You leave stuff on the table in general when you don't know what you're doing. A lot of people just don't want to one let other people see their information, and then they think they have greed in them and they don't want to give anybody any money. I'd rather not pay you $300. I'm gonna do it myself, but then I short myself
Yeah.
$1,000. So you really lost $700. But so the American Opportunity Tax Credit is probably the biggest one that I see people miss. So this is the education credits that
Yeah.
you can get. Either the American Opportunity Credit, which I am maximizing right now as my daughter is in college, and you have your Lifetime Learners Credit, which is honestly a credit that you could get after. You can get it now, but it's something that benefits you way more after if you've exhausted your American Opportunity Credit because you can't claim it longer than four years. So that's probably the biggest one. Another gem is the residential energy credit, right? Energy efficient credit. So that is the credit that you get for like home improvements that fall under energy savings or energy efficient. So that's appliances, right? Almost everything's Energy Star now. That's solar panels. That's if you did like me, I just got two of my HVAC systems replaced in my home in Atlanta with the ductwork and all the other stuff. So you have that credit, which is a big one. Another one that not a lot of people actually know about is the child care, like the dependent credit. So based on how much you pay in childcare, you can write that off if you've paid it to a legitimate child facility, or even if you paid it to a nanny or a person who comes in home. You just have to make sure you add that person's social security number to your taxes. I caution people because if that person is not filing taxes on the money that you said you paid to them, you could also hem that person up. So just be mindful of that. But in the basis, like child tax credit for child care facilities. And of course, IRA individual retirement accounts is one based on how much you paid in. But again, it has to be in addition to not so much what has been reflected on the W-2, right? Because that stuff is already accounted for as far as RA contributions. But you do have people who have additional retirement accounts, and you can definitely write off that between those counts. So yeah, in short, those are probably the main ones that I see.
Hey, Mike, you know me. I have a tendency to go down a rabbit hole. But before I go down a rabbit hole, I'm not going to go too far down a rabbit hole. Did you want to take that same question? Where some things get left on the table or some credits that people don't usually?
Well, I'll say this. I feel like a lot of people operate on the wrong side of the tax code, and that's how they end up losing. And what I mean by that is, of course, I'm going to always bring up the cash flow quadrant made famous by Robert Kiyosaki, where he mentions the 4 ways basically that people make money. And that's the employee, which is a W-2 earner, the self-employed person who maybe has a small business out there, the actual business owner, and then the investor. Most people, to the accord of about probably 95%, operate on the left side of that quadrant, either the employee or self-employed. Whereas I call it the right side of the money, where only 5% of people operate. That is the business owner or the investor. To me, that is where most people leave most of the money on the table, is because they're operating on the wrong side of the money. And like it or not, the way that the tax code is actually written, it is written for people on the right side of the money, the business owners and the investors. So just by you remaining on the left side of that quadrant as an employee or a small business owner, you're leaving a lot of money on the table just because you're missing out on a lot of the deductions that a business owner would have. I'm going to give some examples of just regular stuff. Everybody has a cell phone. Okay, if you are a business owner, you can be writing off that cell phone bill. Everybody has a house. If you was a business owner, you can be writing off a portion of your mortgage and things like that. You could be writing off the miles that you driving on your car. Like all these things that you're already spending your money on, just by putting yourself on the right side of that tax code, you can be getting a lot more deductions, credits, and things like that. So to me, that is the biggest like money left on the table, is just not understanding how the tax code really works and who the tax code was really written for. Most people, again, they just don't take the time to look at the bigger picture of the tax code. Everybody's afraid of the tax man. And so what they do is they operate in this space of fear instead of getting some knowledge on the tax code and understanding the tax code is just an incentive program. That's all it really is at the end of the day. And once you understand that, then you can start to maximize the deductions, the credits, and everything like that. And your refund, if you want one, becomes a lot larger. Or if you don't want one, that's just a lot more money for you to go out and maneuver like you need to. So that is my take on that. Just getting on the right side of the money is a huge leaving money on the table for the average American taxpayer.
That is true. That is true. Like 100% true. Business deductions and can potentially lower your tax liability or increase your refund, right? So you definitely got to know that.
Yeah, there's literally hundreds more deductions for a business owner than there is for a regular employee. Hundreds. And
can I continue or?
Come on, exactly. That's what we do. We cook. If you got something, go ahead.
Okay, cool. I'm glad you opened that door. But no, that's 100% correct. Right? Like when we talk about where you stand as far as the tax code. We already know employees, the W-2 earner, the goal was never for you to actually get rich. You're not going to get rich off someone
Exactly.
else's company. And then you have your LLC, right? We talk about business formations is where we're getting at with this. But even as an LLC, which is a great starting point, right? Off of your freaking interest that you paid on your mortgage, right off your property taxes, right off your mortgage insurance. You could write off your cell phone, your internet, your utilities to a certain
Yeah.
percentage, office
Hmm.
expenses. You can mail off your postal. You can write off your postal stuff. You can write off your car insurance if you drive your car for your business. Right, like meals to a certain percentage could be written off,
Hmm.
supplies to a certain extent, to a certain degree. So to me, those are deductions, not so much credits. Strategize to understand where you sit on that tax code. But then you have your S corporations, right? Which where you'll get the most bang for your buck if you
Yeah.
are a higher earner in the business realm, because
Hmm.
it's going to be taxed lower. Because then instead of being taxed on all of what you earn, which is what an LLC does, right? That Schedule C, those other corporations are taxed only for that portion that they are in that partnership. But yeah, to your point, I agree with you 1,000%. People really got to know those things.
Right? Because I think a lot of people, especially business owners, but even high earners, they don't take advantage of the fact that professionals actually exist out here
Hmm.
that give you a strategy, and that strategy can help not only propel your business, but it'll help you stay off the IRS's radar. Like, how important are tax strategies?
I'm going to let Mike speak first on this because this is way more down his lane. I'll give you my input, but I think he's more the expert on strategy.
Okay. Thank you for saying that. I appreciate it. What I will say on this as far as tax strategy, I'm going to go a little deeper with it and start with the foundation of finance. Really, tax planning is the foundation of basic finance, because what you have to understand, and it's been quoted a lot, money is more so about how much of your money you keep than how much you earn. So this is where tax strategy serves as the foundation of pretty much money in general. Because if you, and I love quotes, so I'm going to put another one. Basically, a fool and they money will soon part. So if you
Yep.
don't take the time to educate yourself enough, how money actually works, three entities already have a huge plan for your money. If you don't have a plan for your money, there are three entities that do have a plan for your money. And the first one, first and foremost, is the government, aka the tax man. He or she has a plan for your money. And so when you don't have that plan, you don't have a tax strategy. This is where a lot of people, and it goes back to what we were talking about before, leave a lot of money on the table, is because you're basically giving away more money than you actually should when you don't have an actual tax strategy. When I talk to people about taxes, or especially tax planning, the first thing that I talk to them about is, okay, you have to understand how much do you anticipate you're going to make this year? Okay, you got to have your number. Like, all right, how much do I know I'm going to make this year? Especially I'll use Rob and you, for instance. Both of you guys are in the military. So y'all know how much y'all making every single month / every single year. So if you know that, you can say, all right, I know as a E8 in the Army, I make, and this is a guesstimate because I haven't looked at LES in 7 years, so I don't know, but somewhere around like $70,000, $80,000, I'm gonna guesstimate somewhere in that neighborhood. So if you know you somewhere in that neighborhood, then you should also know, okay, how much of am I gonna pay in taxes on that
Yep.
beforehand? You know that beforehand. So now you're saying, all right, I got my number now. Okay, I
Yep.
know how much I will owe right now. Then you start looking at, okay, first we got our standard deduction, then we got other things that we can deduct. So you have to look at that number and say, all right, again, it's like a basic math problem. It's like you're doing basic subtraction barely. You're like, okay, if I got this much and I know this is how much I will owe if I do nothing, then okay, hey, let's say to myself, again, are you okay with giving away all that money, or would you prefer to keep it? So
Yep.
if the answer is I want to keep it, then okay, let's do this instead. All right, first and foremost, let's get you on the right side of it. Let's get you like some kind of business. You don't have to be Jeff Bezos to get started with this. You can start writing your house, get you a home-based business. And everybody knows how to do something. If you know how to cut hair really well, or you know how to speak well, or whatever, start a business. You can call it consulting. You know what I'm saying? Like, it could be something simple. Even starting a YouTube channel is basically considered like a business, and you get a lot of the deductions from that. So I would tell somebody, okay, first and foremost, understand how the tax code works and who it works for, and maximize those deductions. But the overarching thing about tax strategy is in keeping with what I said before. If you don't understand how to keep your money, then somebody else is going to take it from you, and you're going to find yourself less than pleased about that. And realistically, you have no one to blame but yourself. So the power of the tax strategy is essentially you taking your power back, you controlling what it is that you're supposed to be controlling, and that is your cash flow. And again, if you have no cash flow control, then trust me, those three entities, I didn't mention all three of them, but the first one I mentioned, Taxman, he definitely going to control it for you.
No, that's 100%, 100%. And that's where I wanted to go to, for the simple fact that when you look at your tax plan, let me take a step back. A lot of people, hey, give me 2 seconds.
Your time just in that you get back. And man, that's pivotal.
I would tell you this too, Savol. One of the things, at the Go Business, we do business coaching, but I talked to Mike about this, and this is one of those things that just a nugget that helps elevate entrepreneurs. But a lot of us, we get stuck into this self-employee mode, and we figure, hey, we got to do everything ourselves. But the fact of the matter is, as a self-employee, what you got to do is begin to make money so you can start to pay people to do the things that you don't want to do. So like social media, knowing that, hey, even saying, hey, it's an excuse. The excuse realistically is, I guess this shouldn't be a business show, but we gonna make it happen. And I'm still recording just so we can capture these nuggets. But the excuse is that you are not willing to pay someone to do it. Because at the end of the day, it needs to be done. It's part of your marketing. It's just where it's at. Now, if you have another market employee, even if it's just word of mouth, what you're doing is holding yourself back from potential growth of your business, because the more clients you get, that doesn't mean that's the more work that you have to do. That means that's less people that you're putting in a workforce, because you should be growing your business to hire people to do the work. You have to look at it this way as, hey, when you look at these unemployment rates, and then there's things that you want to do that you don't want to do, but you don't want to pay nobody to do, like, you're part of the problem, right? You're not employing people to do things that they're good at, and you're not growing your business when you do that. But that's how I cook, man.
Let me say something on that real quick before I forget this thought too. As a business owner, and to tie this into this actual show, as a business owner, this is why you get these tax incentives, is because the government or whoever wrote the tax code is looking at you as a business owner to stimulate the economy. 100%. This is why you get these incentives. So part of stimulating the economy is hiring on employees. And that, again, puts more money into the economy now, because now, more people are in the workforce. And in turn, it is almost like both sides of that wins. The business owner wins because now, like Rob said, you get more revenue, you got more time on your hands. But the government also wins because now more employees in the workforce, that's more taxes they can collect. Essentially, everybody wins in that situation. And this is why business owners get so many credits and deductions and things like that, is because you're basically doing the government's job for them. You're creating jobs, you stimulating the economy, and this is what they're looking for. So that's why it's so important that business owners understand that, hey, listen, your job is to stimulate the economy. Rob said, you supposed to be out here hiring on people and basically keeping the corporate wheel moving. So that just keep that in mind as a business owner, that you have a responsibility to not only yourself and the people that you serve, but just the overall economy as a whole. Like, you're contributing to the big economy.
You are a pivotal member of the community. That's another way that I look at businesses as well, right? So you have to understand your place as a business owner within the community, because you got the policeman and you got the doctor and you got the dentist and all of these people within the community, right? But all of these people got cousins and kids, and they all not doctors, police officers, and firefighters, right? So you have to do your part in the business to say, hey, not only how can I collect their money, but how can I hire them? Because people that work spend money, right? So that's how you generate the economy, by actually creating jobs. And this is going to be another episode, because I'm going to go so far down the rabbit hole to say, don't go down the rabbit hole, Rob. Let's stick to these taxes. But you dead, nail on the head with that. When you're looking at the business perspective of your taxes, this is where you're going to get the most benefit. And the reason you're getting the most benefit is you're actually helping the government feed back into that funding system for them, which is taxes. So I think going back into tax strategy, like why is it so important to have a tax strategy? Mike really covered everything, but I generally believe that is all a part of planning, right? It's a GPS, right? Nobody ever just hops in a car and be like, hey, I'm about to go to Miami and then just start driving. Most people at least look at a map or a GPS, and essentially that's what you should be doing for your finances. If you're not, you're doing yourself an injustice when you are just winging it, because 95% of the time people are just winging it. And that's why they like buying these $1,000 couches, or they ain't even $1,000 couches. It'd be like $300 couches, but they do the buy now, pay later, so they can have a reasonable looking couch in their front room. Essentially because they don't have a plan. Because if I had a plan and I knew what to do with that extra $700, Robert, you're going down a rabbit hole again. I'm reeling myself back in.
For your editor go have a good time.
Oh my goodness. Yeah, he's gonna be like, "Yeah, boy, you was on one that day." Yes, I was. But essentially it's because they don't have a plan, right? And if you outline what it is that you want to do and you gotta have a direction, it's very simple. Because I think a lot of people's this is like where she was like, I'm not trying to offend anybody. I don't be trying to offend people, but people be offended by the things that I
Come on,
say.
Rob. Come on. You know what I'm gonna say already. You already know what I'm
Yeah.
gonna say.
Yeah.
Come on, man.
Cause
This your show, baby. Come on.
see, this is when cussing words come out, right? So if you don't have any idea what it is that you're doing, you're always going to be stuck, right?
Yeah.
And a lot of people generally don't have direction. And I think it's sad. It is not going to help. And then until you like put on your big boy pants and your big girl pants, like you're going to struggle. You have to want something for yourself. But again, a lot of that does come from, damn, boy, you going down the rabbit hole. That comes from religion. I'm gonna leave that alone. Having faith and something to follow, and something that's bigger than you. Let me get back on track. Let's talk about tax software. Why do people think these tax softwares is like it? I can do it myself. It's gonna tell me exactly what I need to do, and I'm good to go. There's a lot of education. There's a blind spot, which is the education piece, because those tax softwares they ask you questions, but some people don't know how to answer them. What is the crippling part of people doing their own taxes?
Tax software was not designed. The tax software that allows you to prepare your own taxes, truly, a lot of those are powered in some form by the IRS, and it was not designed to increase or maximize like your refund if we're looking at it from that standpoint. So it goes to the tax strategy that Mike discussed, right? Having that plan in advance so that you can then know this is how much my tax liability is going to be off top, right? Now, what can I do to reduce that liability on the other end, increase the refund? And a lot of those tax softwares, they ask you probing questions, right, to guide you down a certain path. But then to that point, when we talk about businesses not having their formation or structure or documentation sufficient to actually be able to upload, because a lot of them require you to then upload the stuff that you then said is on the tax return.
Yep.
And if you don't have those documents readily available, you can't just scan in no receipt. Like you have to have that stuff in document form or upload form so that then they can verify those things. That's the difference in the tax preparer, because it's the tax preparer's responsibility to do the due diligence on their end, but they can add whatever to the tax refund. And if any event you are audited, then you have to ensure that you have that documentation to support that. But so from my standpoint, a lot of the tax preparation by the individual, it's done like that on purpose, because it goes to what I said earlier. Some people are just, I don't want nobody to know my info. I didn't do for such a big deal. And then people think that you're here to get money that they don't actually have. Right. And then they just some people want to fluff and finagle their stuff, so they don't want nobody to know what they're doing. But it's just the ignorance of tax preparation, to be honest with you. And if you relinquish, when we talk about business, you talk about outsourcing, it's the same concept. So I totally understand outsourcing. At the end of the day, you let the person who has better expertise or the time or the desire to do, let them do. And on the end of that, just having that willingness to pay. Because like I said earlier, you could do it yourself and save $300 or $400 or $500, or you can let someone else prepare it and then they increase the refund by $1,000. So you really offset only by $500, if that makes sense. That's my thought process.
Absolutely.
100%. I would say this, and I don't want to sound super off the wall, but learning a few things have taught me how to operate everything as a business. So, like the top two things that I've learned, I actually say three, right? When I became a master mason, I learned some structure, learning the Robert's Rules of Order, learned a little bit more structure. But the biggest thing that I see is the Army. The Army is one of those things that taught me that if you're able to operate all of these things, then you can be successful in life. And when I say these things is honestly like life, like my family structure, business structure, even my finances. If you operate like a business, like you can almost not fail if you know what you're doing, right? So essentially, like if I'm the commander, that's why I say this gives you a better idea. If I'm the commander, I'm not going to write the award, sign the award, send it up and sign. You know what I mean? I have a S1, I have a person to do that, right? If I have operations going on, I'm not about to sit down and I'm going to draw out idea of the plan, and then I'm about to send it to seven. I'm about to send it to operations and have them outline the plan and write the op order and all that other stuff. I'm gonna give you a shell of what I'm thinking, but essentially the same way in my family, I'm not about to do the dishes and the laundry and I simply cannot do it by myself. So if I learn how to lead teams and operate within teams, then that leaves me time for what we're getting into is that planning and that strategy. Because it comes down to if you become the Walt Disney of your life becomes so much better, right? But that comes with being able to have free creative thinking and planning. And that's why everything goes back to, hey, you need a plan, you need a strategy. How did I get so far off of software? And am I that crazy?
No, it's cool. It
Rob,
goes.
your mind be, I'm telling you, man, your mind be thinking like several things at once. I've noticed that about you, man. Like
Yeah, right.
you have this way of going off on tangents and stuff. I don't know if it's like a certain word that,
Yeah, it just
and it
triggers me
goes
and
in
then
your
I'm like,
brain, and then it's okay, like several other things comes out after that.
yeah, then I'll be like,
Yeah,
what?
I've definitely noticed that. It's all good though, man. That's why I just be like, man, just go ahead and cook, man. It's
Yeah,
like
let him cook. He ain't saying nothing wrong. He ain't talking about what he's
right.
somewhere else.
And this is good for our viewers, you know what I'm saying? Picking up these little nuggets. We're talking about taxes, but my favorite thing is life imitates art. You know what I'm saying? A lot of things, taxes can translate into a whole lot of other things. You know what I mean? So listen, let's all support Rob. Don't get on his case, viewers, because he's actually giving y'all some nuggets that, you know what I'm saying,
Gems.
in addition. This is, as his words, he giving y'all some free chicken, you know what I'm saying? So
Yeah,
y'all
it's
might as well
free
go on and
chicken.
eat, you know what I'm saying, while you
Yeah,
listen to this.
Building up the empire is what you're doing, right? That's
Exactly.
it
But
ties directly into
yeah,
tax.
yeah. I do want to say something though about the whole tax software thing. It's just as a tax preparer and just a business owner as well. It touches on what both of you guys said. And I'm gonna add a little bit more Money Mike spin. Money Mike likes to hold people accountable for their actions. I'm like, listen, no. If something's happening, it's your fault first because, okay, you are ultimately in control of your life. So I'm going to say this. First and foremost, my thoughts on tax software is it's a money grab. Okay. That's first and foremost. If somebody created that software as a money grab. And if you know anything about the business concept, business basically capitalizes on two things. And the American system as a whole that's why it's called a capitalist society. They capitalize on two things. One, your ignorance, and two, your laziness. Businesses exist to do two things you don't know how to do or things you don't want to do. Okay. And so this is how, and this is where tax software comes into play because you don't know how to do taxes, for one. And for two, you don't want to. They say, you know what? We're going to go and kill two birds with one stone. And we're going to create some software to all you got to do is answer some questions and boom. And people gravitate to that because looking bigger picture, most people, and I say this all the time, most people don't want to be educated. They want to be entertained. Okay. So anything that prevents them from having to be educated, they're going to gravitate towards. And if this makes y'all mad, you direct all the comments at Money Mike because I'm that person. I want you to be accountable for your role in where you are in life. And hopefully this helps you do better. So anyway, now that you got this tax software, now you're not really learning anything for one. And for two, going back to what we were talking about as far as like getting people that know things better than you, you're leaving a lot of money on the table because you're not really seeing the real value. You like, okay, this tax software only costs $100 to do it, whatever, or it's free in a lot of cases versus if I pay Savol to do my taxes for me, and she knows a lot more about this than I do, you're giving up. Like we said at the beginning of the thing, you putting a lot of money on the table because you don't want to spend a couple dollars. And this goes back to people not understanding value over price. Okay. Just because Savol charges you X amount of dollars to do this, if she's making you thousands and you paying her maybe a couple $100, even if it's $1,000, and she makes you $10,000 in deductions and savings and refunds, okay, you just missed the boat because you being cheap. Okay.
Yeah.
And that's what this tax software, that's what I equate to that, is you being cheap and you being short-sighted. Okay. Because you're not looking at the bigger picture of hire somebody that knows how to do this stuff better than you. And we all talked about this as a business owner. That's the first thing that you have to do. You have to go out there and find people that know how to do stuff better than you do, and you let them do it.
Yeah.
You are just the vision caster. Whatever idea it is that you have, like the green order, I want to financially educate as many people as possible. But I may be a shitty marketer. I may be a shitty video editor. I may be a shitty whatever. So guess what? I'm going to find somebody who's not shitty at that, who does it a lot better, and I'm going to hire them. Because guess what? That is where value comes into play. Yes, I had to pay X amount person, $100, $200, $500. But if I make $3,000 off of getting clients and stuff like that, and I get my time, then hey, guess what? That's 2 wins. So I say all that to say people have to start learning value over price. Tax software is the example I'm going to use. Okay, yes, you don't pay anything for this, but the whole point of this show is to get you to understand you're leaving a lot of money on the table when you don't actually find a professional. You don't find somebody who knows how to do this better than you do and actually enjoys it. Because I'm a tax preparer as well, and I actually enjoy it. I like finding that extra money for people. I like to help people like that. And that's what you should be looking for. Even if you're not a business owner, go out there and find somebody who knows how to do something better and let them help you. Trust me, you're going to be a better person for it. Now, I got off on several tangents, but they all do relate to the tax software concept. So Rob, don't get on my case too bad. And viewers, don't get on me too bad either, because again, there is an overall point, and that is you have to understand value over price. And tax software is a cute little quick, convenient thing, but in a lot of cases, you don't really benefit from that because again, there are hidden costs for one. Nobody gets anything for free. There's no such thing as a free lunch. Okay. So if you think that, okay, I got free software. Yes, you got some free software, but you gave up a lot of money in that process. Okay. Because now instead of you getting a refund of, let's say maybe $3,000, now you're only getting a refund of maybe $500-$600. So that tax software actually made about $2,500 off of you.
Easy.
And you don't even get that because again, you're not looking at the forest for the trees. All right, I'm done. Because I don't want to rant.
That was a bar. You said one thing and I was like, you opened up a cam and I'm going to leave it where it's at. But that was a bar.
So
that's a bar.
I do want to just piggyback off of what he said, value over price. I think, and this is where I'm going to go left a little bit. So this is where honesty and self-awareness come in, right? Because when he said, stop being cheap or whatever, you have to understand what is my reason why I don't want to afford somebody the opportunity to do my stuff. Is it selfishness, right? Is it greed? What is it true? Because that's the misconception. And it's the ignorance of not knowing who we are for real and what areas we need to look at and work on ourselves to even have the ability to, do I trust someone else to do my stuff? And if I don't trust them, why not? Have they ever crossed me, or am I tagging along some stuff that I haven't dealt with for real? Right. So the mindset stems money. So I just want to throw that out there. We got to start asking ourselves these questions when people are put in place to help facilitate the life that you want. Why don't we hone in on those opportunities?
Yeah,
that's
absolutely.
An excellent point.
That's a bar. Now,
yes.
And see, y'all are going to send me down this rabbit. I am biting my tongue, but I'm going to just say
we try to give you a chance, man. Listen.
Because I don't want to be talking for 35 minutes no more. No, that's really good. I think the biggest thing, and I've probably talked to both of y'all about this, is number one, you do have to look at this game of life like chess, right? And there are certain pieces on the board that can do some things that other pieces can't, right? And you have to kind of look at it that way. From a value and price perspective, the other piece to this is you really get what you pay for. And for business owners, really want you to, and I'm going to say, because y'all are my immediate address right now. And I've probably said it to you before, right? When people are paying you, you have to look at it from the perspective of they're not paying you again to do their taxes, right? They're not paying you to do their finances, right? The number one thing that they're paying you for is to fix a problem that they have, right? So let's get that point out of the way, right? You're fixing their problem, but the price of fixing their problem isn't, you're not charging them, right? Because you got to type in some numbers or anything. You're charging them for is the 17,000 tax returns that you did before that, the experience that you have, the 8 years of school, the 10 months of school that I have to do, the 2 hours away from my family that I don't get to spend at the park with my kids. That's what you're charging them for. And that's the value is definitely in the education and experience, but just keep in mind that the time is so important. I say all that to say that when people have a certain level of experience, you should expect to pay a premium price because you're going to get a premium result, right? You get what you pay for. And yeah, just so I don't keep going and doing that, I'm gonna stop right there. But that's I give y'all my piece of my mind there. Definitely thank y'all for sharing though. Before we and I want to wrap it up because we've done this. We have somebody on, and all of a sudden we like, all right, we got to do about 3 or 4 more episodes because
I was just
we
about to
got
say that too.
we got some things to say.
We probably going to do a part 2, bro.
Yeah. Yeah, definitely really on this topic because I don't even think I got through half of the stuff that I want to talk about. Y'all hit some high points, right? Before we get out of here, though, let's talk about 3 things people can start doing to track their taxes and stop from overpaying or not paying enough. What are some things that they can do to help mitigate that?
I want me to go first. I'm going to say the first thing that they should do, one is this is for W-2 earners, right? And even 1099 earners. So self-employed people to a degree is look at what your deductions are right now and might set your strategy. What do you make? What is your tax liability? You should know those 2 things. And then look at your deduction to see would I meet my tax liability with what I have my stuff set to right now. And for those self-employed 1099 earners who may have no taxes taken out, right? You do know that you can prepay into taxes so that you don't already start at a deficit, right? So those are 2 quick, simple things. But I would also say review your taxes from last year. If you received what you wanted and if you didn't, look to see where you potentially could have made some changes. And then I'm just gonna say be prepared, be ready. Like I said earlier, don't say you got 10 so you can get all your money up front and then the refund, then the time to prepare your taxes and you don't even have 1, right?
Yeah.
Like you're automatically going to be on the negative side of the tax refund or preparation. And then for business owners, get all your documents and stuff together. Get your stuff together now. Start annotating and itemizing those deductions so that you can reduce that tax liability. Get that Excel spreadsheet if that's what you need to do. Break that junk up into months, total it out at the end of the year. To help your preparer, right? To prepare your taxes quicker than it would take for them to sit down and calculate everything month to month. You can do those 3 things in advance to prepare yourself so you can be ready to file when it's time.
What you got?
Savol pretty much, she hit the nail on the head. I feel, and I want to kind of piggyback off one of the things she said because, man, this is like real low key. She just gave y'all the cheat code. Realistically speaking, if you just want to be like totally lazy and just don't really want to get in the weeds, look at last year's return. Because first and foremost, it's going to tell you what your tax liability was. Okay, if you don't want to take the time to actually go and look and see what your tax liability was, let's say you had the same job this year that you had last year. Okay, go look. Okay, I made this much last year. This is how much they said my tax liability was before deductions. So boom, at least now you have your starting point. So at the very minimum, go look at last year's tax return and figure out, okay, how much, did I actually owe prior to my deductions? Because that gives you a good starting point to at least start. I'm not going to say sit here and totally do the whole tax plan, but at least it gets you that pivotal first step to say, okay, hey, listen, at least I know about how much I'm supposed to pay in taxes. So then when you start looking at things like your withholding and things like that, you're like, oh, wait a minute, I'm on pace to where I'm gonna end up paying more. So then you can go and say, all right, maybe I adjust this, or I can anticipate getting this much. And it definitely makes a more clear plan. And to piggyback off something Rob said, that serves as your GPS now, because now at least you have a direction that you're going in. You at least now know, okay, hey, I'm going to have to pay $4,000 this year in taxes before my deductions. So if I keep doing what I'm doing right now, then I'm going to pay $7,000. Okay, so I know I'm probably going to get about $3,000. You can now say, all right, boom, with that $3,000, when I get it, okay, some of it I can invest, some of it I can pay down some debt, some of it I can treat myself. It gives you an actual plan now. It gives you a destination, as opposed to you being at the mercy of the system. And God, I hate when people even blame the system for stuff, but that at least now empowers you to say, listen, at least I know what's going on now, so I can start to make those decisions. Savol really hit the nail on the head with those. Just my only addition to that would be just look at last year's return and at least get some kind of ideas of what things look like, so that you can go into this more informed than you were last year.
100%. And then my last little nugget is specifically for business owners. Bro, just get a QuickBooks. Get a QuickBooks, get the QuickBooks apps. And the hardest thing that we have a problem with, most of us, is ensuring that we capture everything that we pay for the business. With QuickBooks and that app, you can take a picture of the receipt, and most of the time the system will analyze that receipt, and it can even, if you already build out your chart of accounts, it'll capture what it is, what it's for. If it says gas, it'll send it to the correct account. Take a little bit of time, but you can, if you do the hard stuff on the front end, it's easy as you continue to go. That's what most things. Robert, don't go down that rabbit hole. I was on my way. I was on my way.
There you go. There you go. That one word, there you go. It's making it.
Yeah, reel it back in, man. Just stick to QuickBooks. Y'all need a QuickBooks or something else, or a different type of accounting software. Using my experience, I enjoy using QuickBooks because I take a picture of the receipt, it pop up, and one of my line items, I can either drag it, or it's like, hey, you want to put it here? I click yes, and I'm done. And I just reconcile weekly. Actually, let me not go down that rabbit hole. I have 3 businesses, so I have to reconcile weekly, but on different days. It'll only take me 10 to 15 minutes because I just see what I spent that week, click, done, pull my P&L for the quarter or the year or whatever it is, and then I use that P&L. Or sometimes I use the chart of accounts, because if it just says sales, I want to see if it's from services or products, and then break it down that way and then see how much I spent. Damn, I'm sorry, guys. Sorry. I'm giving you all the juice. Thank you so much for joining us. We truly appreciate your time.
Yes.
And definitely your education. We definitely plan on inviting you back.
Yeah, we got to get this part 2 at least.
Yeah, we got to get this part 2 in. Absolutely. Absolutely. We definitely appreciate you and your wealth of knowledge. Hey, Mike, what's going on in the green order, brother?
Oh, man. All right. So in keeping with this episode, it made me think about 2 pieces of software that I actually have. And I know I talked about software a little bit, but the first one is the cash flow manager. Now, this system is similar to QuickBooks, but to me, I feel like it's a lot more user-friendly, a lot more quick and easy. This software, basically, if you know how to take a picture, then you basically know how to keep records. This software, my overall design of this is basically, this is how you're going to get a lot more specific with where your money is going. A lot of people don't want to track their finances because of how difficult it is. People may feel like they got to create these like wild Excel sheets, or they have to write down everything that they've spent. But with the cash flow manager, like I said, if you can just take a picture, it basically will categorize your expenses for you so that you have a more clear picture of where your money is actually going. Now, my second software is actually called the Cash Flow Strategist. Now, this is going to actually help you create a comprehensive financial plan. It's going to sit down and say, okay, if you want to make $10,000 a month passively, this is how you're going to do it. We'll talk to you about investing. We'll talk to you about debt elimination. We'll talk to you about cash flow management, and we'll actually give you specific timelines like, okay, this is when that will happen. So if you want to get really clear on your finances, just look for the links to both of those in the show notes, and we will get you guys organized financially. And of course, as always, there is my flagship product, the 60-day financial reset, where we will sit down and we will fix your entire financial life in under 60 days so that you will be able to establish your level of rich, and you actually know what that is and will be equipped with the mindset to put this plan into action for yourself. So those are my 3 plugs for me today. And yeah, make sure, y'all subscribe to the Green Order. I'm on all the social medias under the Green Order. So y'all check me out. And Rob, thanks for the opportunity, as always, to put out some great bangers, man.
Definitely my pleasure, man. And real quick for me, if you want to really do a business audit, I'll just start there from an audit. You want to get your business audited? We can look from A through Z, from your marketing to your finances. Go to thegoatbusiness.com/bookings and schedule your business audit, and we will look at everything in your business and tell you what's missing. And then if you want to do that for your finances, go to yourmoneygoat.com/bookings and we'll do a financial audit. We'll look at your statements, we'll look at your debts, and then we'll create a plan for you. And then if you got those Gen Zers sitting around and about to get ready to go to college or already in college, and they want to, and you want to ensure that they get a financial basis and a direction and a strategy for themselves, we have our new curriculum. It's called the Richest Generation. I just believe that Gen Z is going to be the richest generation if they start early, just because they have so many tools at their fingertips, and then the money market for them is so accessible, and I want to get them started early. Again, this idea came from having my youngest client being 19 years old. And this week he's planning on opening up his IRA and funding it himself. Nice. He already has a high yield savings account. And we just opened up a brokerage account. He just moved into his first apartment. Super excited about this. And these are the things that, and having 2 Gen Zers myself and them being a part of the curriculum and actually helping me generate the curriculum. Like, this is like the keys to the kingdom, the richest generation, man. So if you want to put your kids on, definitely yourmoneygoat.com, and then we can get started in the curriculum. So again, guys, thank you so much. You have a good one, and I ain't got no punchline. So till next time, 7 cents, we out. You just tapped into the 7 cents, where the mind meets the money and the legacy gets built.
It's your boy Money Mike, the financial Thanos, snapping one myth at a time and leaving no financial lies standing.
And I'm Coach RL, mind right, money right, legacy locked in. If today's episode gave you game, make sure you rate, review, and share it with someone.
Hey, follow us on all platforms and keep the conversation going, guys. DM us your questions, your myths, and your money wins.
Until next time, think deeper, move smarter, and keep building.
This is the 7 Cents Podcast. We out.